Okay, we're going to work problem number 1111A. And I think your Excel sheet in Canvas is 1111B. And I don't have it in your homework, but you're going to know how to do it based on having seen this demo that I'm working on and examples in the textbook. So you'll be fine. Just take it one little piece at a time. It's time consuming, yes, but it's just a methodical process. So it's not going to be rocket science. It's just, you need some devotion. I need you to show it some love. Okay, so if you want to go along with me on this 1111A, it's in our textbook. You can see that transactions are listed here in my Cengage, because I'm just doing it as the demo through Cengage, but I don't want to flip back and forth. So I'm going to use the textbook for the questions to look at the questions. And so, you have it in your textbook too. On page 429, problem 1111A. So we're just going to work through this one at a time and make these journal entries. I have to get my book a little bit closer to me so I don't have to flip back and forth. Okay, so the first transaction, what happened is we issued check number 414 in payment of the July rent. So we're paying something. So the part you know best is the part you should do first. And so for me, when I see paid, I always think, okay, I'm going to credit cash. And you would indent the cash if you were doing it correctly, but they won't let me indent my credits. So I don't like that. Again, I always tell you that. And so I'm going to debit something. What did I just do? I'm going to read it again. I issued a check in payment of the July rent. So rent expense, because this is July we're doing it in. Usually you have to pay rent in advance. So if it were for an advance payment of rent, you would have, if it was in June that I made the payment for July, I would have credited cash just like this. I would have debited prepaid rent. But since this is this month's rent, I can debit rent expense. Okay, so that's all for transaction one. And then on the second transaction, also happened on July 1st, is purchase merchandise on account from Tilly's Toys, invoice number 311, $2,800, terms 210 net 30. So did we pay cash? No. How do we know? No, terms are stated when you pay cash. It's only the credit sales or credit purchases that have terms attached to them. So this is accounts payable. Instead of crediting cash, we're going to credit accounts payable. And of course, when we owe someone something, that's a liability. It's a credit. It's not accounts receivable that we have going here. This is accounts payable, right? And the amount we purchased was $2,800. Didn't mention anything about a trade discount. So $2,800 it is. We're going to debit the purchases account for that same $2,800. Okay. Anything look crazy? Does that look good? All right. Let's go rock along. The post reference is talking about the accounts you're going to post them to. So I usually wait to put a post reference in until I'm actually transferring it to that general ledger account, because that's my way of verifying that I did post it when I put the account number in there. Because this right here, like for a rent expense, if you go down, you can see on the accounts that there's a rent expense. See, it starts with the cash account in the general ledger, cash account, then accounts payable, then purchases, purchase returns, purchase discount, rent expense. Let's see right here on the rent expense, it says account number 521. That's the account that I'm going to eventually put right here as a post reference. Right. But right now I'm not going to worry about it. Later, after I get all the journal entries made, I'll post each entry that I made to those general ledger accounts, and I'll use the post reference right here. But right now, I'm just going to make the journal entries to record what just happened. On July 3rd, purchase merchandise on account from Shearer and Company, invoice 812, $3,300, terms 110 net 30. So again, there's terms. So we know it's an accounts payable. That's the part I know the best, but that's the part I do first. $3,300, and I'm going to debit $3,300 to the purchases account. Okay. And then the next thing that happened on the 5th, returned merchandise purchased from Tilly's Toys and received a credit memo for the amount owed, $300. So if we returned merchandise to Tilly's, then it's like we're reversing the sale or the purchase. I'm sorry. Instead of debiting purchases, we're going to credit purchases, but we're going to use their little contra account to track it. Purchase, returned allowance is $300. And we're going to reduce the amount that we show as what we owe to Tilly's. So accounts payable is decreasing because Tilly's gave us credit for the stuff we sent back. Okay. Then the next thing that happened on the 8th, we purchased merchandise on accounts from Donna Stalls for $2,900 with terms. So, you know, that's purchases. I'm starting to get more comfortable with my entries. You see that? I actually did the purchases first. Accounts payable is the amount, is the account for the credit, $2,900, because we know we're buying it on account. We're buying purchases. We're increasing an asset. I'm sorry, we actually, if we called it inventory, we'd be increasing an asset. But in this case, we're increasing an expense account, the purchases account. It's a little iffy depending on how you do your accounting, whether you call it inventory, the asset, or purchases, the expense or cost account. Okay, so in this book, we're using purchases and it's a cost related account, like an expense account. Okay, and then July 11th, we issued check number 415 to Tilly's for merchandise purchased on account, less the return on July 5th and less the 2% discount. Looking back at it, Tilly's had given us a 2% discount if we pay within 10 days. So we're paying on July 11th, and we had bought from Tilly's on July 1st. So within the 10-day period, we bought $2,800. So to come up with the net, like in 210 net 30, the net that we owe is what we apply the percentage off on. The net we owe in this case is $2,800, which was the original purchase, and then reduce that by the $300 credit they gave us. So we were at $2,500. We're going to take that $2,500 and multiply it times 2%. And that's going to be our discount that we're going to get for paying early. So the first thing we can do, though, is just clear the whole balance that we owe. At this point, we owe Tilly's $2,500. And what we're going to do to calculate our 2%, we're just going to take the net we owe them right now, $2,500, and multiply 2%, and that's going to be our purchase discount. And cash is going to be the rest of what we have. 2%, what is that? Let's see. 1% would be 25, so that's $50, isn't it? See if that's what they said. Yep. And $24.50 is the amount we actually have to write them a check for. Now, you know that you could put the zeros in these. Any of these, they're going to come out right because they're whole dollars. But you could also put 2,500.00, and that would still be correct. And so if you were working with a lot of things that had cents in them, you'd want to go ahead and put the cents on even on the whole dollars just to make it all align correctly. But these are all whole numbers, so I'm not having to put the zeros in. Let me just double check to make sure they're not going to be finicky about this. I'm going to do a quick check my work, make sure they don't give me grief about not putting my zeros. No, you see how they gave me credit? But if I had put zeros, they still would have given me credit because it would be the same number, right? All right, so let's do July 13th. Issued a check to Shearer and Company for the purchases, merchandise purchased on account, less the 1% discount. All right, so Shearer had been that purchase on the 3rd. And we're paying them on the 13th, so we're within the discount period. So Shearer was this one, $3,300, no returns involved. So what we're doing is we're just clearing out the account balance we owe them, $3,300, 1% discount, which means we get a $33 discount, right? And so that means we wind up paying them cash of the rest of it. $3,300 minus the discount of $33 brings us to $32.67. So the cash we're paying is the 99% of it. 1% of it is the discount, purchase discounts. Okay. Now, July 15th, returned merchandise purchased from Donna's Dolls, giving credit memo on the amount total $350. So what we got is accounts payable Donna's Dolls. It's going to be reduced by $350. And also purchase returns and allowance is going to increase by $350. Yep, looks good. Okay, so let me just show you what happens if you put in the cents. I'll just do it on this one we're dealing with right now. It's $350 even, but I could have put $350.00 like this. Now, would it still come out right? I'll check my work. All of them are yes. Let's look at that one. Yeah, see, it still does. As long as it's still correct. I mean, if it has cents, you have to put them. If there's no cents, you don't have to put the zeros, but you can if you want to. All right, and then now the next page of the general journal is going to take care of the starting with July 18th. Issued a check to Donna's Dolls for merchandise personal account, less the return on the 15th, excuse me, and less than 2%. So Donna's Dolls, our balance to her was when we purchased $2,900, and then they gave us a credit back for this $350. So $2,950 minus $350 means our accounts payable balance to Donna's was sitting at $2,550. $2,550. And we get a discount. Donna's rule was she's going to give us 2% if we pay within 10 days. Make sure that's right. Yeah, look back on the dot problem. And so 2% of $2,550 is $51. So we're going to credit $51 to purchase discounts. And now we're going to write her a check, cash being the checking account, for the difference between $2,550 and $51, which is $2,499. That's how much we have to write a check for, because that's just the total amount we owed her minus this discount she offered us. Whenever we post the payment, we're clearing out the total amount we owed to Donna's Dolls. So we have to debit accounts payable for the whole amount we owe her at that point. Not the amount we originally bought from her, but that amount we originally bought from her reduced by that return that she credited us for. So now the amount we owe today, or the net, is what we calculate the percentage on. That's why the terms always say 210 net 30, 315 net 60, or some other thing. The net is talking about whatever amount you owe at that point. Okay, and so now July 25th, purchase merchandise on account from applied business, $26.50, no discount. Purchases, and I'm sorry, I got them all wrong. Purchase, my fingers are just not doing it right at all. Purchases and accounts payable. And the amount was $26.50. Okay. Then on the 26th of July, purchase merchandise from Tilly's Toys again, $2,160 with the 210 net 30. So $2,180. Get it right. And that's going to be a payable to Tilly's Toys and a debit to purchases. $2,180. All right. Now, the last thing that happened of the transactions was we purchased merchandise from Shear again for $3,560 with terms of 110. $3,560 as purchases. So again, whichever part you are most comfortable with of the transaction, record that so that you can nail that part and say, hey, I know that's right. Now, the only thing I have to do is figure out this other piece. So let's check work and see if all the entries are correct. So I'm just going to scroll through here looking for a little red thing that's nasty gram. Don't want one, but I got to make sure if it's there, I know it. Nope, no nasty grams. We're all in good shape. All right. And then, so now that I have all the journal entries, all I have to do is post them to these ledger accounts. So this problem is asking us, let me go to the directive again. It's the required number one is asking us to enter the transactions. And we did those, the journal entries. And then the requirement number two, the problem, is just saying post from the journal to the general ledger and the accounts payable ledger accounts. So it wants us to post these entries to the general ledger and then post them to the subsidiary ledger as well. And so I'm not going to go spend time doing every one, but I'll do a few of these. So the rent expense, I'm going to debit rent expense for $2,500. And I have to find it first. I know it's down here. There it is. Debit for $2,500. Journal entry page number one. What page was it? Let's see. I'm going to find it. The first page of journal entries was on page 16, right? Yep. And the date for that transaction was July 1st. And then the ending balance, since that's the only transaction, still be $2,500. All right, then I go to the second entry, just methodically, one entry at a time. the cash takes a credit of $2,500. The cash is the first general ledger account. So if I can figure out where I passed it already. Okay. The still in that same journal, the 16th, it's still on the 1st. And it was a $2,500 payment. It was a credit. I'm sorry, not a payment. I need to think of it as how was it posted. So cash has a credit. It had a debit balance of 21,000, and I just posted a credit to it. So I reduced its balance down to 18,500. Right? That makes sense. You don't have to put the zeros unless you want them, but you can. They start out with zeros, so I'll just be consistent, I guess. It works either way as long as you put your decimal, which I almost left mine off. Okay, so now that's the first transactions posted. So I'll put my post reference, account numbers. 521 was my rent, and my cash account is 101. And that little number just telling me that, hey, that's where I was. I got those posted. Now I need to go to purchases and post a $2,800 debit. Okay. 2,800. It's also on page J16, not J17. And it is also on the July 1st. So that's the only entry that's happened to purchases so far. So that's all I have in that account. That's the second entry. Purchases account is number 501. So I posted that. Now I'll go to accounts payable. Tilly's Toys, 2,800. How did I miss some? Okay, here we go. Oh, that's the subsidiary ledger. Accounts payable, where are you? Right here. Okay, and so accounts payable is $2,800. And that's the only thing that's happened so far in accounts payable. It happened on July 1st on post reference J16. And then at the same time, that is the first transaction that affected accounts payable. And it was about Tilly's Toys. So she had a $2,800 entry. So I probably would do all of the journal entries first in the main journal entry and then come back and look at everything that had accounts payable entry and code it out here and post it to the subsidiary. All right, so accounts payable for Tilly, accounts payable in general, I'm sorry, is 202. And then I go to purchases. Every one of these the same exact way. There's nothing complicated about it. So then once I get them all posted, then I go back to every one of these journal entries that had, well, I guess I could do it on the accounts payable account. Nope, because it doesn't say which account it is. I have to go back to the general journal and see each accounts payable and post them also to the subsidiary ledger. See those that have the little extra check mark in this area? Tilly's Toys needs that posted to her account. So I'm going to go to the subsidiary ledger for Tilly's Toys. This happens to be the last one in the alphabetical order. And I'm going to post that entry that we just saw, J16 again, and July 1st. And of course, it was a credit of $2,800. And after that happened, she had a $2,800 balance. And just so you can see how it posted, if I posted all the transactions, look what would happen to Tilly's. She would have an entry on July 1st. Then she'd have another one on July 5th, one on July 11th, and one on July 26th. The first ones were all on the 16 page of the journal. And the last one was on 17. All right, so it had been a credit of $2,800 that was posted to this account, and then a $300 debit, which brought my balance to $2,500. Oh, $2,500. And then we had another transaction, which was a pay the balance on it. That was that credit, remember? Oh. And that brought the balance to 0. And then we had another transaction with Tilly where we bought some more goods from her and started the whole thing again. Right? So let's just check my work and see what we got. Everything that we've completed is going to have a check mark if we did it right, but then there's a bunch more that we still have to post in order to finish it up. So you could check every once in a while and see with your check my work. So you see I'm down to right here. Then to finish this up, I would just take each one of these and just methodically post it to the general ledger. And then if it affects accounts payable, also post it to that accounts payable subsidiary ledger, and it's going to be all good. So I totally know y'all can do this. And even though you're not doing it in Cengage, you're just looking at your book and doing the same type of entry. So you just will enter it on the Excel sheet the same way that we're doing here on this, because this looks just like an Excel sheet, doesn't it? It's the same kind of thing. And so just give it a shot, get some confidence, and make sure you don't give up on me. Okay, thanks.